Hello everyone, hi, welcome to the channel of Wall Street Mojo. Friends, today we're going to learn a concept which is known as debit versus credit in accounting. This is like the left hand and the right hand of the whole accounting system. I mean, without debit and credit, the accounting system cannot be worked out. So let's understand these two concepts in a much detailed manner so as to get a hold on that. See, debit and credit are, you can say the cornerstones of the accounting. So if you want to learn accounting, debit and credit would be the first concept that you would learn. Remember one thing that in a business, many financial transactions takes place in a financial period. So as an accountant, it's your job to look at the transactions and find out all the accounts and then identify each transactions either debit or credit. Now, before we go in detail, we need to understand the double entry system. See, the double entry system means that every transactions would have two effects, right? And the double entry have two accounts. So basically, you can say that one is the debit entry and another has the credit entry. Now, the two accounts, there's not two effects, the two accounts, one would be the debit and another would be the credit, as we just discussed. The debit and another will be credit, right? So like for an example, let's say a company withdraws a cash of 10,000 from bank. So this transaction involves two accounts under the double entry system. One would be the cash and another would be the bank, right? So in this tutorial, we are going to discuss debit versus credit in complete detailed fashion. Let's learn this with the help of the infographics, the differences between the two. The first point of difference is going to be the definition. The debit is the use of the value for the transaction. That means any expenditure that has been incurred, which is a use. All those transactions which has a use of a value for a transaction, then it is debit. Credit is a source. So any expenditure, anything that is basically into use is your debit, and anything that is a source of the value for a transaction is your credit. Is as simple as that. Now, application. Debit is used to express the increase or decrease of the assets and expense or the liability and incomes. So you can say that, let's bifurcate this. The debit items are basically when the asset increases and your liability basically increases. So debit is when the asset increases and the liability increases, and debit is also when your expenses increases and your income increases, right? And in case of credit, it's the opposite. When the asset decreases, the asset is credited. When the liability decreases, and when the liability actually increases, sorry, then it's a credit. Over here, when the liability decreases, then it's debit, right? And same for the credit. For income and expenditure, if the expense is reduced, then it is credited, and if the income is reduced, then it is debited, so on the plus side. So this is the whole application. The debit is used to express the increase or decrease of assets, expense or liabilities and income, which we just discussed. And credit is used to express the increase or decrease of the liabilities and incomes. Over here, assets and expenses, or liabilities and income, and here liabilities and income or assets and expenses. Let's go for the third differences. In journal, see, remember one thing, journal is like the base of any accounting system. Without journal, you cannot form your financial statement, because if your journal goes wrong, your ledger goes wrong. If your ledger goes wrong, then then your trial balance goes wrong. And if your trial balance goes wrong, then your financial statement over here is going to go completely wrong. So journal is like the center point of everything. Now, debit is the first account that is recorded, and credit is recorded after a debit account followed by the two word. So it's something like this. Let's say you say that Mr. John, he purchased a car of $20,000. So car account over here is debited, DR2, because the cash is going out. So the cash account is basically credited. So this is how the entry has been recognized and over here you will record 20,000 because you purchased for 20,000. The cash is going out, and over here the car as an asset is coming in your balance sheet. That's the difference. So this is how it is recorded in the journal entry. The fourth point of difference, the placement in T format. Now, debit and credit, it is always placed in the right hand side when we talk about the debit, and it is always placed on the left hand side. Now, what is this T format that we are talking about? It's about the ledger. So the ledger is something like this. There's a date, then there's a particulars, then there's amount. Then again, these three things are repeated. Why these three things are repeated? Because it's for debit and credit. So this is the format that I'm showing you so that you have some clear idea regarding how a ledger account is prepared. Draw a line over here, and let's say this is your cash account, right? So this is your T format. Over here, there'll be a line in the middle. As you can see, this line is going to be the line of the middle. That's what it is known as the T format. So this on the, if you see on over here, this is your debit side on the very left hand side, and over here this is your credit side, right? So let's take this account only, the car account to cash. So in cash account, the car has to be credited, right, over here as 20,000. So placement in the T format. I hope you got the whole idea regarding the ledger. So we are talking about here as a ledger. The equation, asset is equal to liability plus equity. Now remember one thing, the balance sheet is again, I'll just take down some numbers over here as there's liabilities over here on the left hand side in the balance sheet. This is, we are talking about balance sheet. There's amount over here, and there is assets over here, right? So on the, what we are talking about, that assets is equal to your liabilities plus equity. So your equity should come at this end, and below that there'll be all liabilities. So let's say if this is 100, so let's say your equity is 1000 and your liability is also standing at 1000. So your assets also has to be, the total over here has to be the same. So this is 1000 plus 1000, which is equal to 2000. So your total assets has to be also be equal to 2000, right? This is what they're saying. Assets is equal to liabilities plus equity is affected by the debiting one account, and assets equal to liabilities plus equity is affected by also crediting one account. Now the balance act. Under the double entry system, the debit alone cannot balance the whole transaction. Similarly, credit alone cannot balance the whole transaction. There has to be a double effect. One has to be a debit entry, another has to be a credit entry, just like over here, car to cash. So car is debited and cash is credited. So it has to make a balance. And that is what is known as the double entry system. Now an example for cash. Under double entry system, debit alone cannot balance the whole transaction for the sales for cash. And similarly, credit also cannot balance the whole transaction without assistance of the debit account. Similar to over here, it's like cash account debit. If you have done any sales, then cash account debit to sales account credit, which is, let's say, standing at $12,000. $12,000. So this are the examples set for the cash. So that's what we discussed, sales for cash. So after discussing all the differences, I can make a final conclusion that debit and credit exist together like twins in accounting. If you understand one, understanding the another is really easy and very clear. If you just remember that what increases and what decreases, you would be able to identify which account should be debited and which account should be credited. And all you need to take an example and try out. Pick any transaction of a business and try record the journal entry, what we did over here. All you need to do is just to take an example and try out and pick any transactions of a business and try to record a journal entry. So you will easily be able to understand the meaning and the application of the debit and credit items. Thank you everyone. Cheers.